Good afternoon and welcome to GrainTV. It's June 18th, 2013. To my left is Logan Burgess and I'm Brock Shimbano. We had a narrowly mixed day in Chicago. Let's turn over to Fire Tip to see how we ended. Corn on the old crop was up 4 3/4. New crop was up 12 cents. Soybeans on the old crop down 1 3/4 cents. Soybeans for new crop up 4 1/4. Wheat in Chicago up 7 cents and Kansas City was up 5 1/2 as well. You know, Logan, we did see most of the grains positive across the board. The only negative that we did see was old crop soybeans. And we're trading positive for a good part of the day, but I think where a lot of the action happened was in old crop corn contract.
Yeah, so if we look at the action today, we had old crop corn closing higher for the third day in a row here, and kind of more importantly, catching a lot of headlines was that we finally closed that gap left on the chart from the March 28th quarterly grain stocks report. Let's take a look here at a daily chart of that July contract. As you can see, here's that gap left. Technical traders, when they see these gaps, they look for them to be filled at some point, and it took a while, but we finally did it here today. Let's jump into the daily chart of the action that we saw here. The bottom side, or the top side of this gap rather, is where this yellow line is. That's 676. And as you can see, once the day session opened here, we rallied quite a bit here. We were able to finally trade above there. We weren't above there for long, though, before the sellers really came into this market. So, technical traders for a long time have been looking for this thing to be closed. And just over the last couple trade sessions, it seems like, news that China might be looking for old crop U.S. corn as transportation issues in Argentina persist. And additionally, domestically, we have very strong cash basis right now. We did see that wane a little bit here today, but certainly it was those two factors in particular that seemed to really push this thing higher. As I said, the gap's now closed, so right now it's kind of a guessing game as to where this thing's headed. I wouldn't be surprised if this did limit the trade a little bit. We certainly saw a lot of selling after the gap was closed in today's action, but the bottom line here, moving forward, the big driver of that old crop corn contract is going to be the quarterly grain stocks coming out on June 28th here, and we'll keep you posted on expectations coming into that report here on GrainTV.
You know, we had some good action in the new crop soybean contract as well.
Right.
If we could take a look at the daily chart for the November soybean contract, you can see here that we did trade up towards that top end of the trend line, that basically the top end of the channel that we were trading in most of the winter. We did break above it a couple weeks ago, but once we did fall back below, I think we're going to meet some resistance, one coming from that 200-day moving average, which is the white line coming in there, and then also that top side of that channel that we traded in most of the winter.
Yep.
And I think a lot of what's going to drive us to the downside is pretty good growing conditions across the country. If we take a look at these greenness maps that we have provided by Planalytics, you can see here, this is actually the corn belt. We do see substantial dry areas or lower greenness values than what we saw last year at this same time. And I think that's not really a cause to be concerned right now. I think a lot of what is driving the lower greenness values is that we had an exceptionally early planting season last year, and this year we had an exceptionally late planting season. So the difference between this year and last year is quite substantial if you take a look at the second map here. But I don't think that's because we're lacking the greenness capabilities. I think it's just a matter of time, the next couple of weeks or so. I think we're really going to see the greenness take off here in the next couple of weeks.
Yeah, absolutely. Right now, looking at the kind of the weather models here for the next week and a half, 2 weeks or so, it looks like things are quite favorable across the U.S. So I wouldn't be surprised if we did see, as you said, a little bit more greenness develop on this crop. Certainly that would be expected at this time of year, and see the good to excellent rating raise a little bit as well. As we know, if we think about yesterday's crop progress report, we really didn't see that change week over week. Wouldn't be surprised if we see it move higher on next Monday's report. In general, though, Brock, that's kind of what we saw here for a Tuesday. Certainly today didn't have the fundamental news that we saw yesterday in the market, but certainly some important technical aspects to take a look at. If you guys want to chart these contracts for yourself at your home or office, you can visit us at grainhedge.com and take a no-obligation trial of the platform that we use here on GrainTV. Coming down the pipe here for the grain market this week, tomorrow we will get EIA ethanol numbers out. Expect another good crush number there. We've seen the crush margin remain very strong out in Iowa, about $1.93 per bushel right now. So that was up a little bit on the week, and certainly expect another good number there. Thursday we will get the export sales report, so that will be important to take a look at as well. Thanks a lot for joining us here on GrainTV. We'll see you tomorrow for the EIA report.